In 2005, Tesla delivered fewer cars than it did the year before, and fewer than the year before that. For the first time in the company's history, sales have fallen 2 years in a row. And while Tesla was shrinking, a company Elon Musk once laughed at on live television sold more than 600,000 more electric cars than he did. 1.64 million Teslas in 2025, down 8.6% from 2024, down from a peak the company has not touched since. The crown that Tesla forged, the title of the best-selling maker of electric cars on the planet, now sits in Shenzhen, China, on the books of a company called BYD. And if you think this is just a story about one bad year or a brand that people simply got tired of, you are not even close. Because Tesla did not lose its crown in 2025. It started losing it the moment it decided it was no longer a car company at all. So how does the most valuable car company on earth, a company worth more than the next 10 car makers combined, lose the one race it invented? And who paid the price while the man at the top kept promising a future that never showed up? Subscribe, because I break down every giant in this industry the moment its story turns. And Tesla's story just turned hard. Here are the numbers, because the numbers are the whole story. In 2025, Tesla delivered 1,636,129 vehicles worldwide. That is a decline of 8.6% from the 1.79 million it delivered in 2024. And 2024 was already a decline from 2023. 2 straight years down for a company whose entire valuation was built on the idea that it would only ever go up. The fourth quarter was where the floor gave out. Tesla delivered 418,227 cars in the final 3 months of 2025, down about 16% from the same quarter a year earlier. The decline was not slowing down. It was accelerating into the finish line. In that same year, BYD delivered 2.25 million fully electric vehicles. That is not a typo. BYD outsold Tesla in pure electric cars by more than 600,000 units. A year earlier, in 2024, Tesla had held onto the crown by a margin of just over 20,000 cars. 1 year later, the gap is not 20,000. It is 600,000 in the other direction. This is not a sales dip. It is a coronation in reverse. And to understand how the company that built the electric era handed it away, you have to go back to a television studio in 2011 and a question that nobody thought was serious. In October of 2011, Elon Musk sat for an interview on Bloomberg television in a glass studio. The interviewer asked him about a Chinese company called BYD. Did he see them as a competitor? Musk laughed, on camera, and he said, "I do not think they have a great product." Then he asked, "Have you seen their car?" Hold on to that laugh. We are going to come back to it. By July of 2020, it passed Toyota to become the most valuable automaker on earth by market value. And in October of 2021, Tesla crossed $1 trillion in market capitalization, the first car company in history to do it. At that moment, Tesla was worth more than the next 10 largest car makers in the world combined. More than Toyota, Volkswagen, General Motors, Ford, and yes, the very company Musk had laughed at, all stacked together. Tesla sold around 936,000 cars that year. Toyota sold roughly 10 million. And the market still valued the smaller company at more than 3 times the larger one. That is not a valuation. That is a belief system. Wall Street was not paying for the cars Tesla built. It was paying for the cars Tesla promised to build, and the robots, and the self-driving fleets, and the future Musk described from a stage under bright lights. The actual product was almost beside the point. That was the peak. Maximum confidence, maximum valuation, maximum certainty that the company could not be caught. And it was the exact moment the catching began. Here is what Tesla did with all that certainty. It stopped behaving like a company that sells cars and started behaving like a company that sells whatever comes after cars. Look at the product timeline. Tesla has not launched a genuinely new mass-market passenger car since the Model Y, which went on sale in 2020. That is 5 years. In an industry where rivals in China launch a fresh model every few months, Tesla offers, across most of the world, exactly 4 vehicles: the Model 3, the Model Y, the Model S, and the Model X. The S and the X are well over a decade old. The 3 and the Y have been given facelifts, but they are the same 2 cars Tesla was selling before the pandemic. In Europe alone, buyers now choose from more than 150 models, with around 50 new launches expected in a single year. Tesla brought a refresh to a knife fight. So where did the money and the attention go? Into the Cybertruck, which Musk said had more than 1 million reservations and which has quietly failed to become a top seller. Into a purpose-built robotaxi. And into the idea repeated on earnings call after earnings call that Tesla is not really a car company at all. In Musk's own words to investors, really, we should be thought of as an AI and robotics company. Read that again. The chief executive of the company that made electric cars normal was telling his own shareholders to stop thinking of it as a car company. That is not a pivot. That is a company quietly walking off the field it conquered. And while the top floor in Texas was painting a future of humanoid robots and driverless fleets, the present, the boring business of actually selling cars, was being handed to somebody else. That handover showed up first in Europe. In 2025, Tesla registrations across Europe fell 27.8%, down to roughly 235,000 cars, from around 326,000 the year before. And 2024 had already been down about 10% from 2023. 3 straight years of decline, each one deeper than the last. By July of 2025, for the first time ever, Tesla was outsold in a single European month, not just by BYD, but by SAIC, another Chinese maker most American drivers could not pick out of a lineup. Now here's the part that matters, the part that tells you this is not about electric cars falling out of fashion. In that same year, the European electric vehicle market grew. Battery electric cars climbed to 17.4% of all new registrations in the European Union, up from 13.6% the year before. The market got bigger. Tesla got smaller. That is not a decline. It is a defection. European buyers did not stop wanting electric cars. They stopped wanting Teslas and started buying them from everybody else. And the new year opened even worse. In January of 2026, Tesla registrations in France fell 42%. In the Netherlands, where Tesla had been the #1 electric brand, sales cratered by nearly 67%, and the brand dropped to 5th place. In Norway, a country Tesla used to own, registrations fell 88% in a single month, down to 83 cars. Now, part of that Norway number is a quirk. The entire Norwegian car market collapsed that month after the country ended its tax break on electric cars. But 83 cars in a market Tesla once dominated outright is a number that speaks for itself. China told the same story in a different accent. China is Tesla's 2nd largest market on Earth. And in 2025, Tesla's share of China's new energy vehicle market fell to around 8%, down from about 10% the year before. In the official Chinese rankings, Tesla slid from 3rd place to 5th. The Model Y, which had been the best-selling electric car in China, watched its sales there fall 11.45% and lost its #1 spot to the Geely Xingyuan, a small, cheap Chinese car that almost no American has ever heard of. And in October of 2025, for the first time in 3 years, Tesla fell out of China's top 10 best-selling new energy brands entirely. It happened again in early 2026. The company that taught the entire world to want an electric car is now, in the 2 largest electric car markets outside the United States, an afterthought. Now this is the part that should make you, the owner, sit up. Because somebody paid for all of this, and a lot of the time it was the person who already bought the car. When demand started slipping, Tesla reached for the one lever it had left: price. Across 2023 and 2024, Tesla cut the sticker price of its new cars, in some cases by as much as 20% in the United States. Musk himself admitted the prices had gotten, his word, embarrassingly high, and the cure was to slash them. Think about what that does to you if you already own one. You paid $55,000, $60,000, $65,000 for a new Model Y. Then you watch Tesla advertise a brand new version of your exact car for the low 40s. The value of the machine sitting in your driveway just fell off a cliff. Not because you drove it hard, but because the company that sold it to you decided to undercut you to move metal off the lot. Analysts found that some owners who bought near the peak lost $25,000 to $35,000 in value in about 30 months. Once you stack normal depreciation on top of those cuts, Tesla's price cuts dragged used electric car prices down by as much as 30 to 40% across the whole market. That was not a price cut, it was a wealth transfer, out of the pockets of loyal owners and straight into next quarter's delivery report. If you bought near the top with a long loan and little money down, you did not just lose value. You ended up upside down, owing the bank more than the truck was worth. And you found out the quiet way because the car in your driveway does not mail you a statement when it loses value. You only learn the number the day you try to sell. If this is the kind of breakdown you want, the real numbers behind the headlines with no hype and no spin, subscribe. I do this for every major car maker the moment its story turns. Now let me show you the pattern underneath all of it, because the lost crown and the gutted resale values are only symptoms. This is the disease. Here's the pattern. For more than a decade, Tesla's value has rested on promises about the future. And for more than a decade, those promises have arrived late, or not at all. Start with self-driving. Musk has promised that Teslas would drive themselves fully with nobody watching the road, essentially every year since 2014. In 2016, he said the cars already had every piece of hardware they would ever need for full autonomy. In 2017, he promised a Tesla would drive itself across the entire country, coast to coast, by the end of that year. It never happened. In 2019, he told the public the cars would be, his phrase, feature complete that year, that an owner could fall asleep and wake up at their destination. Then in April of that same year, he told investors that next year, for sure, we would have over 1 million robotaxis on the road. He said owners would earn around $30,000 a year, letting their cars run as robotic taxis. $30,000 a year just for owning the car. The check is presumably still in the mail. Then 2020 arrived. There was no robotaxi fleet, no passive income, no self-driving breakthrough. An investor lawsuit later argued that those timelines were not optimism at all, but something the law takes a great deal more seriously. Then there is the Roadster. Tesla unveiled it in November of 2017, a sports car promised for 2020 with a spec sheet that read like science fiction. 0 to 60 in under 2 seconds. A top speed over 250 miles per hour, more than 600 miles of range. As of the middle of 2026, it still does not exist. The reveal has been pushed from 2020 to 2021 to 2022 to 2023 to 2024 to 2025, and now Musk talks about production in 2027 or 2028. The people who put down deposits back in 2017 will have waited nearly a full decade. For a car Musk now claims will, his words, literally fly using rocket thrusters. Those deposit holders are presumably still waiting on that too. And then, the robotaxi itself. On the fourth quarter 2024 earnings call, Musk said word for word, Teslas will be in the wild with no one in them, in June, in Austin. This is not some far-off mythical situation. It is 5 or 6 months away, and Tesla did launch a robotaxi service in Austin in June of 2025. But there was a human safety operator sitting right there in the car, which is the one single thing Musk had promised there would not be. By January of 2026, he was back on a call admitting Tesla needed 10 billion miles of driving data before it could safely run those cars with nobody inside. Now remember that laugh. 2011, a glass television studio, Elon Musk chuckling at a Chinese company and saying he did not think they had a great product. The autonomy was going to be feature complete next year. The million robo-taxis were coming next year. The Roadster was coming next year. And while every one of those next years quietly slipped into the year after that, the company he laughed at did something deeply unglamorous. It just kept building cars and selling them and building more. In 2025, the company with no flying sports car and no robot army took his crown by more than 600,000 cars. The future never showed up on schedule. The competitor did. So where does that leave us? On paper, Tesla has never been worth more. The stock recently touched record highs. The company is still valued above the next 10 car makers combined. And in the first quarter of 2026, Tesla actually edged back ahead of BYD in pure electric deliveries for a single quarter, around 358,000 to 310,000. Look, I'm not saying Tesla is going out of business. It plainly is not. But a stock price is a bet on the future. A delivery number is a fact about the present. And the fact about the present is that the company that invented the modern electric car is no longer the company that sells the most of them. The next test is already on the calendar. In the first days of July, Tesla reports its delivery numbers for the second quarter of 2026. That report will tell us whether the first quarter bounce was the start of a real recovery or just one good quarter in the middle of a longer slide. Whether Tesla is clawing the crown back or whether 2025 was simply the year the story changed for good. Whatever that number turns out to be, I will be right here to break it down, line by line, with the receipts. Subscribe so you do not miss it. Because the most valuable car company in the world just proved that being worth the most and selling the most are no longer the same thing. And BYD is not done climbing.